Hello, good morning, everyone, and welcome to this webinar with the Spain-US Chamber of Commerce, Holland Knight, Abanca and Blanca Real Estate. My name is Juan Carlos Pereira. I am the Executive Director at the Spain-US Chamber of Commerce, and it's a pleasure today to be with all of you to talk a little bit about real estate, which is something very important and critical for South Florida and for Miami in particular. But I think that the things that we will discuss today will affect not only Florida, but the whole US. So thank you everyone for being with us today. We have a great team of panelists with us, professionals with large experience in the sector, in the industry. And so I would like to thank them to spend this time with us. I'm going to briefly introduce each of them, and then I will talk a little bit about some housekeeping questions about the webinar and today's topics. So we have today with us Vivian de las Cuevas Pia. She's a partner in Holland Knight's Miami office and serves as the deputy section leader of the real estate section. Ms. de las Cuevas has experience representing developers in a range of projects, including land development, multifamily, condominium, office, and single family development and hotels. She also handles the financing for these types of developments, including institutions and mezzanine financing, public representation of complex real estate transactions, as well as government relations. She also focuses on joint venture negotiations for these transactions at all levels. So she has an extensive experience in complex real estate transaction. She has a JD from Tulane University Law School and a bachelor degree from Florida State University, and she has the bar admission in Florida. So thank you so much, Vivian, for being with us today.
Thank you.
We also have with us Fernando Tope, which is Senior Vice President and Chief Credit Officer at Abanca USA. Abanca, for some of those that doesn't know the financial institution, is the 6th largest bank in Spain. It's an international bank with about 90 billion in total assets and over 5,000 employees. It has a presence in 11 countries, including the US, headquartered in Miami, Florida. They service domestic and international customers, are very technology driven, and can service customers all over the world. In fact, almost 50% of their customer base is digital customers. The role of Fernando Tope in Abanca is to oversee the bank's credit risk and underwriting process, and works together with the Abanca's team in loan structure recommendations in order to ensure that customer needs are met while maintaining a sound risk profile for the bank. Fernando has worked with other banks in South Florida, including BB&T, Banesco, and Inter-American Bank, among others. And he has over 15 years of banking experience in the credit risk field and has developed an excellent partnership with regulators and bank external auditors. In his free time, he enjoys sports, particularly football and basketball, and really hopes the Miami Dolphins turn it around this year. So thank you so much, Fernando, for being with us today.
Thank you for having me.
And also we have Juan Ruiz, which is Vice Chairman of Blanca Commercial Real Estate, which is the leading independently owned commercial real estate service firm in Florida, and has over 18 years of experience in the commercial real estate industry. On behalf of the firm, Mr. Ruiz leads in the leasing of significant projects, such as the Nuveen Alliance portfolio in Waterford Business District, Aventura Optima, Centrum Doral, and One Coco Walk. In addition, he has also represented notable companies, including Prestige Cruises, Perkins and Will, IA Interior Architects, Dufry, and Molina Healthcare. Since joining the firm, Mr. Ruiz has closed more than 3 million square feet of office transactions throughout South Florida. Prior to joining to Blanca Commercial Real Estate, Mr. Ruiz was director of Codina Realty Services LLC, the real estate leasing division of Codina Partners that manages leasing of Codina Partners' owned properties. And previously, he was vice president at Flagger Real Estate Services. Mr. Ruiz holds a Bachelor of Science in Business Management from EAFIT University in Colombia and a Master of Business Administration from Florida International University. So thank you so much, Juan, for being here with us today.
Thanks for having me, Juan.
So as you have seen, we have an extremely great panel today to address the real estate and how it's affecting or how it's affected by COVID-19. So before we start, this is going to be a conversation, and we would like also you to participate. So anyone that have any question and would like to ask something, you could do that through the control panel that you may find on your right side of your screen. You might see a control panel, and there you could see questions. If you click there on questions, it will open a box and you can write your questions over there. We will start with the conversation asking some questions for each of the panelists and some for all of us. And at the end, we will save around 15-20 minutes also to include the questions of the attendees. So please feel free to send your questions during the webinar, and we will take care of them later. Also, this webinar is going to be recorded, and we will share the video, the presentation from Abanca, and the contact information of the three panelists in a follow-up email. That way, if you would like to contact them directly for more information on any of the topics addressed, you may do so. Well, so let's start talking a little bit about real estate and how are we doing with this strange situation. So I guess that our first question is, I know COVID-19 is definitely a new uncharted territory. So can you share with us what you think are the most difficult challenges you have seen to date caused by the pandemic in South Florida? And I would ask this for the three of you. So I don't know, maybe Vivian, would you like to start?
Sure. So when the pandemic first started, and if we just focus on real estate, Holland Knight, just for background, has 1,400 lawyers sitting in 29 offices. And the only reason for me to make that comment to you is we had perspectives from every single possible major city in the US, plus Mexico and Brazil. Mexico and Colombia. So it was very interesting to have these conversations amongst our partners, because the pandemic was obviously something that affected the entire United States, the entire world. Therefore, it affected our clients in so many different ways. But the number one thing that we were all looking at from day one, first and foremost, was it didn't matter what area you were in, acquisition, leasing, development, you were looking at your force majeure provisions from a legal perspective. And it was very interesting because as a lawyer sitting in Florida, my force majeure provisions, because of my experience, deal with hurricanes and deal with not being able to get bounded and insurance and how do you move forward. But pandemic and epidemics were a word that we all ended up realizing we were relying on this act of God concept. And it was very unclear. So this was going on. Meanwhile, all the courts in the United States are being shut down. So if you were a landlord, you were concerned from one perspective, what are tenants going to do? From the tenants, it gave them some relief, but at the end of the day, it was just buying time. And this was something that had been unprecedented. It was not like the 2008 pandemic, because it wasn't a pandemic. It was a Fed real estate situation with banks, and no courts were closed. So you had your day in court, didn't matter who you were. And here, for many right reasons, the courts had to pause. So we were sitting, advising clients on what do you do during this time versus now. Let's talk about where we are 3 months later. Some courts are open, some courts are not, some courts are seeing certain things. So now it's a very different story for our clients on how they need to act. It doesn't matter what hat you're wearing, the act is different. So this COVID-19, from a purely legal/business perspective, is something that has affected all industries. somewhat differently. If you're a grocery store, you're, as happy as you can be. A grocery store, you're great. But if you're retail, clothing, how did you adapt, and how do you deal with the bank and everyone that's sitting behind you? And this was nationwide. So it is ever changing, and every week that the pandemic is here, because it's still here and we're not living a quote unquote normal life, and I don't know what normalcy will be, is challenging us to look at, like I like to say, the devil's in the detail, that detail of those agreements, whatever they may be, to see what the next step is. And everything is a short-term decision, unfortunately, right now. That's my opinion.
Thank you. So Juan, what about your opinion? What are the challenges that you are facing as a real estate industry related company?
Yeah, so it's definitely unprecedented, and I agree with Vivian. So we're a commercial real estate firm. We handle the leasing of about 6 million square feet across South Florida, 6 million square feet of office space. We also represent a lot of tenants. We have a property management platform as well. I think over the last few years, we were involved in over 30% of all the office lease transactions that took place. Blanca was involved in one way or the other. I lived through 2001, I lived through 2008, and I never saw anything where even the companies that are not being affected hit the brakes. Like, I think it's the uncertainty that's really killing everybody, right? So we have, there's two things. One, every deal we've been working on has been delayed because nobody knows what to expect. Right. So even if you are a grocer, even if you are in healthcare and tech, those industries aren't necessarily being affected as badly. They all hit the brakes. So one issue we had is obviously everything slowed down. The other issue we had, and we represent both tenants and landlords, was the disconnect that there is between both parties. So, although landlords right now are working, and we'll talk about, the rent relief and all that, but although landlords are working with tenants and landlords are being flexible and landlords are being very creative, well, the office market really hasn't shifted. And rental rates have not gone down, right? So the landlords are being very firm with regards to lease rates and lease terms. But at the same time, our tenant clients are saying, I want COVID pricing. I want huge discounts because this is a pandemic. So it's tenants are taking a wait and see approach. They're trying to evaluate the market, which is really hard to do because this is unprecedented. And none of us know, if there's another wave, what's going to happen 6 months from now. A lot of the deals that were originally put on hold are now back. They're active again. It took us a couple of months to get them back on track. They're still moving a little slower. I think the issue for tenants or for companies is that we'll talk about rates and how they really haven't been affected short term after 2001 or 2008. But a lot of tenants are taking the wait and see approach, which at the end of the day really just works against you, right? Because when it's time to negotiate, you lose the leverage. I think landlords know when you don't have enough time to move at a certain point. So for us, the biggest issue has been the disconnect between our landlord clients and our tenant clients.
Okay, interesting. And that's something that we will discuss a little bit later. So Fernando, from the bank's perspective, what have been the challenges that you have been in this situation with the COVID-19 related with the real estate?
I agree with Vivian and I agree with Juan. I think that the fact that this is very unusual, this is a very unique situation for us, really creates an atmosphere of something that we don't know what's going to happen going forward. We really want to help our clients. We are active in real estate financing, but it's really hard to lend, and it's really hard to go ahead and make a loan when you don't know for sure what's going to happen with real estate prices down the road. As we have said before, the economy in 2008, it was all caused because of increases in real estate prices and really a bubble. But this is different. This is something that has really affected all industries. It has really affected all businesses. So really, the only thing that we can do as a bank is really take a more conservative approach to a lot of these transactions. Really require a lot more equity per se from the clients to really protect ourselves. And really, honestly, just hope for the best and hope for a turnaround of the economy.
Okay, interesting. Well, that's something that people could understand, to be more conservative right now in these times. Okay, I have a question now that it's more for Blanca and Holland Knight. So during these months, many businesses have been talking to their landlords in order to obtain some kind of relief in their rent payments. So what have been the most common agreements that you are aware that have been closed during these weeks and that will probably continue for several months now? Juan, what have you seen?
So Juan, so we work with all different kinds of, investors, developers, both local and institutional landlords. I think there's definitely a spirit of collaboration. I think there's definitely a we're in this together mentality, and both our local and institutional owners that we represent are really addressing each case on a case-by-case basis. Everyone's implemented a process. You've got to have a process. It requires, originally tenants sign an NDA or a pre-negotiation agreement. They then are given a checklist with a lot of financial information that the landlord really needs to, one, see if there's merit to the request, and two, there are asset managers that handle the properties, but asset managers can't just hand out rent relief. So there are internal processes with all the landlords. In some cases, may even require lender approval. So it's interesting. You start seeing that when you hand out the checklist and tenants know or companies know what information has to be given. If a lot of the tenants that don't really need the help, pull back and don't proceed with the process because they don't want to work through all that. And it's been great because it lets the landlords really focus on helping the companies that need the help. Landlords are also requiring that the tenants that request rent relief have also applied for PPP or the government relief programs. It's seen as a symbol of hardship or at least a proof that there is some kind of hardship. I would say, though, that besides like the cafes in office buildings or the car washes or other tenants that are seeking more amenities, those folks are getting rent relief, rent abatement. They're not paying rent for a few months until we figure out what's going to happen the next 3 months. Everybody else it's really come down to 3 to 6 months of rent deferment, which means they're not forgiving your rent. What they're doing is, you won't pay rent for 3 months, but come 2021 in the, early part of 2021, you start paying it back. In some cases, the rent deferment has been added to the back of the lease. But it's always been rent deferment. I will tell you that across our agency portfolio, we probably house over 5,000 companies. It's really interesting because 20% of the companies have requested rent relief in one way or the other. But even if you include the ones that did not qualify or the ones that passed on the process or didn't want to go through the process, less than 5% are delinquent on rent. So for the most part, everybody's paying rent. We have a portfolio in Waterford, just south of the airport. We have about 1.8 million square feet there, hundreds of tenants in different sectors. And as of today, there are only 3 tenants out of hundreds, 35,000 square feet that hasn't paid rent. So we've been pleasantly surprised in that more tenants have paid. Of course, that all depends on, your tenant roster and the creditworthiness of your tenants.
Okay, yeah, it's good. So, and what you mentioned about the months, what is the most common period? It's 3 months or 6 months?
3 months. 3 months. So what we do now is we'll say, and a lot of times as leasing agents or the property managers, we provide recommendations to the owners that are not here, locally. So what we're doing now for the most part is we'll start with 3 months. This started in April, so April, May, June, or May, June, July. And then come July, we reassess again. And depending on how things are going, some tenants might need more deferment.
Uh-huh.
We've had others that applied for deferment, got it, and then called us back and said, we're good, we're going to pay. So.
Okay, interesting.
It is a good time. I think it is a good time because landlords are being flexible and they're willing to listen and work with tenants. So it is a good time to speak to your landlords if there's an issue.
Yeah, and I think that is key, and it's something unique in this situation that I see the landlords and the tenants open to discuss. And Vivian, you can bring a light here. What have you seen in terms of from a legal perspective? What other types of agreements that you've seen in these last weeks, and how are they dealing? Are they more, open, or you see something different? Oh, we cannot hear you, Vivian.
Can you hear me now?
Yes.
Okay. Very similar to what Juan said. I don't want to duplicate. I'll just add to that. 2 things that you will see. The national tenants are trying to say, we are going to do an agreement across the board. And that's where you're like, well, that's great if you can get that in, Idaho. But in Miami, where, we don't really have the need to do that. So you're pushing back a lot. I would say the national tenants were coming out of the box as like a year deferment. And I will tell you, I haven't seen one of my landlord clients accept that yet. And you also have to be realistic. The banks are working with our landlords, but they're not going to sit back and say, don't worry, don't collect rent for a year and we'll see where it goes. So that has been interesting. Exactly what Juan said, because there's a process. So two things that I think are very different than 2008. In 2008, people stopped paying and just ignored everybody. They would hide from their lender. They would hide from their landlord. Because I think people learned that if you're the first to approach them, you might get a better deal. Everybody ran to their landlords for the first time. And since nobody knew how long this was going to last, I think there was also truly that fear. Because of that, there's a discussion going on and everybody's asking for more than they need. And then the process of filling out whatever process each landlord puts in place, which may or may not be precedent by what their lender's asking them, is making real deals happen. And those people that all of a sudden wanted 3 months abatement, all of a sudden, I will tell you now, being June 1 coming in, so many people are caught up and didn't sign the amendment or didn't sign the deferment. Now, that is what I'm seeing in Florida. We have a couple of clients that are doing things in New York, in Chicago, in DC. That's a very different market. And that is not what we're seeing there. And it's really, DC's been big on 1-year pushes. We're not accepting those. And then we have tenants like WeWorks that we have in DC buildings that are single tenants. Yet we were very concerned with WeWorks' economic situation, and they're paying. So every situation is different. I think Florida is really doing better than what we expected, and there are bigger crises in other cities and very just good conversations. So 3 to 6 months is what you're seeing. I'm not seeing so much added to the back end. I'm seeing it amortized either to come to, if it's 3 months, bring it up throughout the end of the year. If it's 6 months, maybe 12 months. That's generally what I would see.
Good. And before you leave us, from the legal point of view, is the COVID-19 a situation covered in most contracts right now that would liberate tenants from paying the rent in these circumstances?
No. So what's interesting is if you have a good force majeure provision, whether you have pandemic or any other word or act of God, in most force majeure provisions, it does not accept you to pay rent. If written properly, that's in there. So it's not going to get you out. So you're going to have to go back and have a conversation with your landlord. Now, people understand the world we're living in. So you just have to have those conversations and see where you go. There's a couple of landlords that haven't been so nice, and that's life. But generally speaking, you can't just stop paying rent.
Sure. Thank you. Fernando, from the point of view of the bank, the landlords also have been talking to their lenders for an equivalent relief from their mortgage payments. So how are financial institutions dealing with this, and what type of arrangement are they usually offering? What are you seeing?
Well, most certainly, landlords are coming to the bank. It's sort of a trickle-down effect. The tenant is asking the landlord, and then the landlord is coming to us. And for sure, we have gotten several of those requests. The situation that these landlords are having is that their properties are really not generating enough cash flow to really have to cover all those property expenses and really have to make those loan payments. So typically, what we have done is we set up a deferment period that is typically 3 months, and that can extend up to 6 months. So it is matching with what Vivian was saying about the particular rent abatements that have taken place with the tenants. We are matching that term of either up to 6 months. I think that's about the max that we are doing. And what we do there is that we really waive the P&I payment for that period. Landlords really don't have to be, make that payment for that period, so that we can provide that cash flow relief that they really need. And one of the things that we make sure that we don't do is we don't really require that landlords have to come out of pocket at the end of that deferment period and have to come up and pay that lump sum of money. What we've done is it really depends on the case. You have to analyze the situation. But what we have done is typically those funds are either added to the maturity of the loan or the balloon payment of the loan, or we set up a payment plan where we really amortize those funds over the life of the loan. And I think that the key here is to really analyze that cash flow, analyze that rent roll, those leases, those abatements, and really make sure that the property is generating sufficient cash flow in order to pay all those property expenses, in order to be able to make our loan payment, and that we're really not choking our landlords per se with excessive amounts of payments and these modifications, and that we're really providing that room, that cash flow room that they really need in these tough times.
And have you received many requests from your clients from mortgages? What's the percentage of companies or landlords that have requested that kind of help from you, more or less, ballpark?
I think more or less, I would say anything between, I would say around 20%, something around that range. 1 out of 5, they're coming to us and they're asking for that payment relief. Really, this is something that has affected so many industries. It's not only retail. There's other, a bunch of other industries that have been affected. So really, we try to keep an open mind here. We try to be helpful. We try to cooperate. We understand that this is a very tough situation to go through, and we as a bank, we want to be there for our customers.
Thank you. Thank you. Juan, this question is for you. So many businesses have reduced their employees in a significant number because of the difficulties now in businesses in general these weeks. Many of those businesses won't need for the near future the same amount of space than before. So as one of the most relevant commercial real estate players in Florida and in charge of many of the prime office buildings, can you tell us about what are you experiencing right now in terms of people that might be looking for smaller space than what they already have hired?
Yeah, so I've got a lot to say on this one because there's a lot going on, and I'll clarify that I'm a little biased, obviously, but I'm really optimistic. I think that office space is going to continue to be a really important piece or component of how companies, one, attract and retain talent, how you expand into other markets, right? You set up a new office, and how you maintain within your company a strong culture of collaboration, right? It really makes a big difference when you've got people in a room. I think, as Vivian mentioned, we've got a lot going for us in South Florida and Miami in particular that a lot of markets don't have. And I wanted to share a few of the things that we're seeing. First of all, we started with really good market dynamics, very good tenant supply, tenant demand, limited top tier or class A product, and solid rent growth over the last few years. In 2019, we reported the highest rates in every single one of the major Miami office submarkets. To date, we've seen little or no change in rental rates. We're seeing activity pick up, including in-person tours. We right now have about 900,000 square feet of tenants that are exploring the Miami market. But what's even more important than that is we have about 350,000 square feet of new to market tenants, which we didn't have 4 years ago, we didn't have 5 years ago, and we definitely didn't have in 2001 or 2008. So you're starting to see New York, California, Chicago, family offices want to be here. When we compare this recession to what we saw in 2001 and 2008, when our market was still kind of evolving, we had higher vacancy back then. We had a pipeline of a lot more product that was getting delivered. So in 2008, when everything hit the fan, we had 4.4 million square feet of office that was getting delivered. Today we have less vacancy, we have better dynamics, and there's only 2.2 million square feet, which is a small component of the overall market. We're seeing a lot of flight to quality, which means tenants are putting more people in less space, or they were, but they're willing to pay for nicer, more expensive buildings to get better amenities. So the buildings that are under construction now are achieving significant pre-leasing. So I'll share, we represent the One Coco Walk building, the new building in Coconut Grove. We signed a lease yesterday with a law firm for about 16,000 square feet. We have another lease that's out for execution, and that's going to get us to 90% lease before the building's even delivered. If you look at 2001 and 2008, rents went down by $1 or $2 over 3 years and then bounced back right away. Another thing we have going for us that a lot of markets don't is that our tenant industry profile really is predominantly professional services, financial services, legal, media, healthcare, and tech. And these are industries that are all expected to weather the storm a lot better than all the other industries. So I think you're going to see that, yes, you do have companies for the most part that are saying, I am going to have less people in the office, and not my employees are all going to go back, or we're going to phase in. But you're going to end up having less people in your office, but need more space per employee. Yeah. So the net is going to be very difficult. And most of us that are in this business, and a lot of the architects, happen to think that it's going to be a wash.
Okay.
You know, we've seen tenants actually expand, and because before this happened, we had tenants that went from 3,000 square feet to 1,500 square feet. We had people that had employees in stand-up workstations. So literally their employees are standing. You can't do that anymore. So a client like that recently expanded. So it's hard to gauge.
Yeah. Vivian, you wanted to add something, don't you?
A couple of things that we're also seeing, you know, obviously from the legal perspective, although some companies may shrink, the reality is law firms had already changed the way they were doing things. For example, partner and associate offices were starting to look the same, but, you know, we are probably the last of the Mohicans, but we still need our privacies. We still need to have a lot of confidentiality. So you're going to have that in doctors' offices, and you're going to have that in lawyers' offices, which are a big part of the market. So that's not changing. But on top of that, what's very interesting is if you speak to realtors who are doing residential real estate, the amount of Northeasterners moving to Florida, forget about what they were doing before in the family offices, and everything Juan is saying is absolutely true. Now they're like, I do not want to live in an apartment. I do not want public transportation. So that is through the roof. And if you go to the private independent schools, the application list for these kids to come over here and come to school now, because they feel that at least schools may be somewhat open here, and if they're not, they're in a home, is huge. So what's going to happen, those people and those businesses are coming here, whatever those businesses look like. So even if we shrink, I think South Florida is a very interesting market for purposes of office space, because there might be more companies occupying these offices, but there's going to be the businesses, where in 2008 was really the beginning of us starting to see the influx of businesses moving to Miami, because we were, you know, one of, I always mention this, but Alan Ojeda said this, and I always take his quote, you know, he says, we were finally seen as part of the United States. So when we were part of the United States, they were like, great, now we can actually have offices here, not just a gateway to Latin America. And that was, you know, 12 years ago. Now we are part of the United States, a very proven part, and I think someone who's going to unfortunately benefit by this pandemic. So, you know, Juan will stay busy.
True.
Fingers crossed.
Yes. So with the bad, there always is a ray of sunshine. No. So what do you think that is in particular as it relates to the South Florida real estate market? Be specific as to areas of the real estate market. And this is a question for all of you. Maybe Fernando could start if you like.
Yeah, I think that, you know, without a doubt, you know, areas that have been hit the hardest have been, you know, retail and hospitality. Every time you shut down tourism, you know, something like this is going to happen for an economy that is really reliant on tourism. But, you know, like Vivian and Juan have said, I think the office market has really shown positive signs here. You know, anything that has to do with you know, law practices, medias, you know, the vacancies there are in check for now. You know, things are looking good. Also, the healthcare sector. I think the healthcare sector has been, you know, had increased demand for quite some time now. I don't see that stopping anytime soon. Anything related to tech and cloud computer services, such as data centers, storage facilities, I think that those could also be seen as a positive sector. I want to add here also multifamily, based on the conversations that I've had with appraisers and other industry professionals. For the most part, tenants are continuing to pay the rent. So maybe not a growing sector right now, but at least a stable sector, I would say. So at the very least, I think us here in South Florida, we are in a very good position compared to other cities. And I think we have a lot of property types here that are stable real estate investments.
Great, thank you. Juan, what do you think about that?
So I think there are definitely opportunities. As I was saying, for us, I think the biggest opportunity and what we're really excited about is just the new to market activity. You know, we're always going to capture the domestic companies, but when you start seeing, you know, 350,000 square feet of companies from New York, Chicago, other markets come here and consider this a real solid, you know, market. In the last couple of weeks, I've probably gotten 4 calls from 3 of them were family offices, 2 out of New York, 1 out of California. On Brickell, we just signed a lease with a company that's relocating from Canada, 17,000 square feet. We have a lease out for execution with a financial services. We have another one that's a media company. We didn't see this 4 or 5 years ago. And I'll tell you why. I think we have a great situation here. We have favorable tax rates. We have no state income tax. We have amazing weather, global, multilingual, multicultural workforce. Our rates, if you compare them to New York or California, are still lower. And as Vivian mentioned, and it's gotten really important, after the pandemic, is we're not reliant on public transportation, in markets like New York City or Manhattan. We're getting, even the landlords that we work with that are in New York are saying, I live in the suburbs. I really don't want to jump on the subway right now. So that's worked for us as well. So I think it's that. I think just the attention Miami's getting and the youth market activity for us has been amazing.
So with all this new commerce coming, it would be maybe we should advise the local people, be aware that prices will rise. That could be a consequence, no?
Yeah, I think we've been, at least rental rate wise, and Vivian can shed more light on this, but at least office rental rate wise, we're at all-time highs. So I think if they go up, it would be, I think on our end, they'll stay steady. I don't expect that they're going to go down. I think landlords are being, they'll give you a little more free rent. They'll give you a little bit more in tenant improvement allowance, but the rents I don't see going down.
Vivian, what about you? What do you think about the specialty of South Florida?
So it's interesting because I was taking the same route that Juan was. What makes us different? I mean, weather. Barring a hurricane, which we are all going to ignore for the next 6 months and hope it goes away. Weather, public transportation, state taxes. Those are things that are now going to be highlighted more than ever. So our lack of public transportation for the first time is going to be applauded versus complaining about. So, but people aren't going to mind it for right now. We're going to get in our car and be like, yes, we can get in our car. Now, I will tell you, I was trying to think, what have we been seeing, particularly in my group? Banks definitely put a hold on their lending immediately when this happened and are trying to understand their underwriting. That is no longer the case. And Fernando, I don't know if you agree, it is a reassessment, slow moving back. So the banks are now open. We've had more capital than we've ever had here that was always competing with the banks on these private lenders. They're open. You have multifamily developments. I mean, I've negotiated so many of them in the last 3 months that it's crazy. Brand new construction, joint ventures. We're dealing with industrial developments, huge portfolios being sold. So I'm trying to look, and then even my hotel clients are surviving. Miami Beach opened. Now they've worked throughout it. The landlords don't want them to fail if they don't own it, or the lenders don't want them to fail. So we will see. But if there's going to be tourism anywhere, it's going to be tourism in places like Florida that you have an outdoors opportunity to do what we do, i.e. our beaches. So, I see us well positioned for a horrible situation. And I think there's going to be a lot of markets that are going to be up and coming. There are many companies, let's be clear, that have decided that a group of their, I'm going to give you an example. Dear friend, General Counsel for NBC, Hispanic markets, all legal, is staying home till the end of the year, period, end of story. Now, they were already crammed into their offices, so it's not like they're going to shrink their offices. They're going to expand in order to comply with what we need. But what she's seeing is media's coming down here because to shoot certain things, they rather be here in the hot sun because supposedly weather's supposed to help for some of these scenes. And since people can't get on planes or aren't as willing, wherever your headquarters are is also going to drive some of that. So, we do have a cruise industry that we can't ignore, is incredibly hurting, and it's sitting in our backyard. What does that do? It's going to have an effect on our tourism, but luckily people are just going to also drive their cars all the way down Florida and stop in all of our beautiful beaches. So business is going to be there. I don't think that prices are going to go up. I think right now landlords are going to be very cautious about analyzing who is coming in And if you're going to make a deal to sell something or joint venture something, you want to know who those people are and that they actually have the capital to perform is going to be much more important than getting more per square foot on a sale or a rent, would be my take, at least for the short term. We all forget what has happened. And, you know, I'm curious to see if we record this and January 1 of next year, what we're talking about may look very differently, but at least for right now, that's what I think.
Yes, that would be very interesting. And now that you have mentioned about hospitality, well, hospitality, it's key here, at least in Miami. We're opening up Miami Beach right now, the hotels and beaches. Restaurants have been operating for a week or two, depending on the area, at a 50% capacity. So how does the hospitality industry look? And I would like to start this with Fernando, because I know that Abanca has a strong relation with hospitality industry.
Yeah, yes, definitely. Things didn't look too good the last few weeks. Everything was pretty much halted per se, with travel halted and tourism at an all-time low. But now we see things are picking up. We're happy to see a lot of this restaurants and a lot of these hotels opening up, and even if it's to a limited capacity, I guess they can they can at least get started with that process to start ramping up the revenues, to start stabilizing their properties. With regards to players that are going to be most affected, I really do think that small businesses, smaller hotel chains, boutique chains, smaller restaurants, I think those are probably going to be affected the most, because compared to medium-sized and larger businesses, they have limited access to resources and limited access to capital. So I do think that at the end of the day, the larger restaurant chains, the larger hotel chains are the ones that are most likely to survive, and the ones that are most likely to get out of this alive per se. But I do think that an important thing is leverage. How much debt a lot of these players have, and this applies regardless of the size of the company, whether we're talking with a small boutique hotel or a larger hotel chain. The amount of debt that you have is really going to play an important role here, because as you start opening up for business, you're going to go through a ramp-up period where you begin to build your customer base per se all over again. You begin to stabilize your business. You aim to be profitable. So imagine that's already hard enough. And on top of this, you have to add a bunch of debt that you have to deal with, that you have to work out with banks. I think that's going to have a really big impact on who can survive and how fast they can really recover and get out of this.
Thank you, Vivian. So who do you think who can survive and how in the hospitality industry right now?
I think creativity is going to play a long role. Although I think the smaller boutiques are harder hit because they just generally may not have the pockets. I think there's also become an awareness to help the locals, and everybody think local. I hope we continue that as a community, because that's really going to help the smaller boutiques and the smaller restaurants, and not necessarily go to the chains. Not that the chains have done anything else bad, but we all assume they're in a better position, which is not always accurate. I think that what you can offer, discounts are going to be huge, unfortunately. And then service, because since people are going out in a very limited situation, wherever they're going to go, they want it to be great. And yet they're going to be challenged because they can only be open 50%. So it's not like they can turn tables any quicker or have more guests than they can. And they're going to have to enforce the rules. So I think for hospitality, it's really, truly a huge challenge to be this nice, beautiful boutique hotel, yet you're like, yeah, you can't sit next to each other, or I'm sorry, it's going to an hour and a half before you can get into the restaurant. And, we all forget. So I don't know who survives. I don't think they know. I also know that we represent a lot of the very large hotel chains who have done some major furloughs, from legal department all the way to the front desk. And the original furlough was 3 months, and now it's been generally extended to September, October. So they're also just trying to figure out, and I would envision that those larger chains, whether you be hotels or restaurants, are going to continue to have to close some stores, and they're going to have to analyze which markets can survive and which markets cannot. And that was probably what we'll start seeing truly in the next 3 months.
Okay, thank you. And we talked about it a little bit earlier in general, but how do you think South Florida fares in the real estate market in relation to other specific major cities in the U.S.? Juan, what do you think?
So I'm really optimistic. I think our diverse economy, we have a really strong entrepreneurial ecosystem that I think is going to help. You know, we talked about the tax structure, the weather, and all that. Weather-wise, I grew up in California. I'll take a hurricane over an earthquake anytime, right? Because at least you know when it's coming. But I will tell you the other thing that we have that most states don't is we have a really, really tight link with Latin America. And regardless of what happens in Latin America, we always seem to benefit, right? So when things are bad, we get flight dollars. When things are great, we get the investment dollars. So it's almost like an added lifeline that Florida has that most states don't. And I think on top of everything else that our state already offers, we're in a really good position compared to other states.
Vivian, what do you think?
So I think there's also two things to add. I completely agree with Juan. One, we've been in the news. Usually we're in the news because we couldn't count our ballots right, or we couldn't do something right in Florida. For the first time, if you continue to watch, DeSantis and our governor and our mayors have been in the news being praised for how well we've handled this. For people who are fearful of the state or city they're living in, it makes us, Florida and us, South Florida, look much better. Although we are, these crazy South Floridians. So, if you go to other states, it's very funny. You have to get tested if you're coming from Florida, but you don't have to get tested if you're from other states. So there is still that air of a reality that we're, this bad city. But I do think we've gotten some positive press, and that helps people be comfortable to come spend dollars here. And that's going to help our economy. Also, besides the LATAM, 150% agree. We still have that additional influx that's really going to happen from the New York and Northeast area that was already happening for tax purposes, let's be clear, but now it's a safety and security purpose. So again, those two things work in our favor, and I'm bullish and more than I've ever been actually about South Florida.
Good, thank you. How about you, Fernando?
I agree with both Vivian and Juan. I think that we as a city here, we're in a very good place. We have a lot of advantages over a lot of other cities. A lot of investors now are really in wait and see mode to kind of see what happens with this pandemic. But I think as soon as people start gaining that comfort level, we're going to see a lot more activity out there in the real estate market, and we're going to be seeing a lot more stabilized prices out there for real estate properties.
Good. So we mentioned before about the PPP plan, the Paycheck Protection Program, and many small businesses and large businesses as well took advantage of that. So does the effect of the PPP loans affect the real estate market? If yes or no, why? So who would like to start? Vivian?
I'll jump in, and I'm going to make 2 points because this brings me back to something I should have said during the deferment agreement. One of the things that you're seeing is these deferment agreements. One of the things that landlords are requiring now is, sure, we're going to give you a deferment, but if you get that PPP, you need to absolutely A, tell us, and B, apply it to our rent, because part of the PPP is supposed to be used to pay rent. So that was a covenant that was very interesting. That's when some people chose not to take their deferment because now they were confirming to their landlord that they got this money and they had to use it. So we'll see what goes on there, because some people are going to say, I'm going to take the penalty and not use it. We'll see. But I think most people are not. And most people, this money helped them get through now. This is what we're talking about, June, but give or take. The question becomes, do these companies, whatever company you're in, healthcare, doesn't matter, can you ramp up enough that now that you're not going to have any more PPP money, can you pay it? So it absolutely helped real estate to an extent. It might have even given us a fake reality of what people were capable of doing. And I think the next 2 to 3 months, we're really going to see where the different markets or the different real estate products end up, because there's not going to be that assistance. But it was definitely helpful, and it gave people some breathing room, and hopefully they counted their pennies and stored them for a rainy day.
Juan, what do you see about the PPP in your site?
We're seeing from our perspective, I was going to say the same thing that Vivian, the landlords that we represent are actually, one, requiring that those funds are used to pay rent, but if you request deferment, the first thing they'll ask you is, did you apply for these? So it's, these loans are available to you, these programs are available. Don't ask us to defer your rent if we're not seeing that you're at least trying to get that as well, right? So on our end, it's really helped, because I think with those PPP loans and the SBA loans and all of that, it really has reduced the number of tenants that have come to landlords to ask for assistance. I think even more importantly, you're paying your employees, which is great. If you stop paying your employees, it just becomes an even bigger mess. So they've definitely helped at least short term, right? I don't know what the effect is going to be long term, but short term, they've definitely helped the real estate industry. Okay,
good. Fernando, any insight from your side, from the bank?
Yes, just to add from a bank's perspective, the small businesses, they really need, they have mentioned, they really need those funds, at least on the short term, to really pay their payroll, pay the rent, pay their utilities. It really gives them that ability to stay afloat and gives them that ability to remain open. So in general, the more that the small businesses remain open, the less vacancy that we're going to see out there in the market, and the more stable prices that we're going to see for real estate, particularly commercial real estate.
Okay, good. So a question for the future. So as Vivian was mentioned before, we are recording this, so we will be able to see it in a few months or in a year and check what we said right or wrong. No, but if you had a crystal ball, what would you think the South Florida real estate market looks like at the end of 2020 and this time next year? Vivian, you want to start?
Sure. I think it's going to be really interesting on the different products. I think residential single family homes I think they're really going to skyrocket. Whether you were living in an apartment in Miami or living in an apartment in New York, you're going to think twice if you want to be in an apartment if COVID-19 hits again. That's one area. I think joint ventures in general, doesn't matter what you're developing, may slow down a bit, because people are going to be cautious who they're going into business with, and can they get a product out by a certain time. So new construction joint ventures might be an interesting challenge, not off the table, just slow and cautious. I think that you will continue, though, to see, in general, products like multifamily, industrial warehouse, probably more now than ever, industrial warehouse, and offices active, maybe a little differently than what we've seen a year ago, but definitely active. I think those people who are selling plexiglass and are able to redesign certain areas are going to be really busy, because all of these spaces will have to look and feel a little different, and our new norm will look differently. But I think the one that's going to be hurting the most is retail and hospitality. And hospitality brings in a whole lot of different things. So I don't know what will happen to the excess hotels that don't survive. I don't know what will happen to the excess restaurants that don't survive. And then in general, the stores, the retail stores, that's going to be, I think, if I were to say the problem children, they're going to land in those buckets. And some are going to do really well because they're creative, and some are not.
Juan, what do you see in your crystal ball?
So I wish I had one. I think from my perspective, I think it's almost too early to tell. And I think a lot of it depends on, what happens with COVID, how long COVID lasts, whether there is in fact a second wave in the fall, which now they're saying, whether, we get hit with COVID-20. I think a lot of it depends on that. But I would say at least in the next 6 months, office building wise, commercial lease wise, we don't see any extreme changes happening. I think we're going to see a lot of tenants renewing when their leases start expiring. I think if you need the same space, less space, more space. At the end of the day, it's easier to stay in place. And I think a lot of the landlords are offering flexibility and short-term leases to existing tenants. I do think we're going to start seeing more interest from tenants that are in the CBD, Brickell, downtown, that don't have to be there in suburban markets like Waterford or Doral. Connectivity to the highways, easy access for all employees. You've got less density, smaller spaces, so you're in an elevator with less people. So I see those markets gaining more activity. We were seeing a flight to quality before COVID, and I think we see that continuing because now tenants are even more focused on, better janitorial services, touchless systems in the bathrooms, automated doors, smart elevators, better quality, air quality controls, outdoor amenity space, and it's the newer or recently renovated buildings that offer that. I think we'll see less density in the workplace. I think it'll be a wash. I think you're going to end up, like I said, with less people, but more space per employee. And I do, again, reiterate that I think several industries, hospitality and food and beverage, are going to get hit really hard. Hopefully it doesn't last as long. But I think we will see the industries that we most rely on continue to excel and do very well.
Thank you, Juan. Fernando, what do you see in the future? For the future?
I don't want to repeat the same, but I think we all agree that retail and hospitality are going to be hit really hard. There are going to be some players there that are going to make it. It depends on how creative they are, like Vivian said, but they'll definitely be hit hard. All other asset classes, I see them as really remaining stable. I don't see, given the whole situation, the high unemployment rate and everything that we're going through, I don't really see a lot of growth going on for those types of properties. I really see them as more of a stable investment at this point. I think they're going to remain flat for some time.
Okay. Well, thank you. So we have some questions from the audience. I would like to ask this, and whoever would like to address it, welcome. So one is, how do you see the residential real estate market in Tampa and Orlando? I don't know, maybe Juan, you want to step in?
I actually don't. That's not my area of expertise, unfortunately. So I don't know. Anybody else on the panel maybe has more insight.
Any of you?
No.
Okay.
No, I mean, honestly, I'm sorry, not my area.
No problem. I have here another question is, if I'm a tenant and I want to ask for rent deferment to my landlord, what do I have to do? What do landlords require in order to grant rent deferment? Could you please explain this process? Juan or Vivian, any of you?
Go ahead, Juan.
So if you are a tenant and you want to speak to your landlord about rent deferment, the first thing I would say is don't stop paying your rent, right? I think landlords prefer or will be more, will listen more if you're paying your rent and you don't just go, hey, I'm stopping paying. So don't, continue paying your rent. And as soon as possible, reach out to the property manager, send formal documentation and email, whether it's your attorney, contact them. Have your broker, if you have a broker, review your lease to see what remedies you have. You might have a downsize option. You might have the option of sublease. You might have a termination option. There are a lot of different clauses in different leases, so review your lease carefully. But the biggest part or the biggest recommendation, I think, is pay your rent. Be nice about it, which, believe it or not, it makes a huge difference when you're dealing with landlords. Landlords are dealing with so many of these requests. When you get the tenant that is nasty, that is offensive, that is just that tenant, believe it or not, happens to be the last tenant that gets helped. So be nice and be reasonable in your request. If you ask for 2 years of rent abatement, it's not going to happen. But if you ask for a few months and you document it, it's very likely that landlord will work with you. We're happy at Blanca, if anybody has any issues with needs lease review or needs a little more information on what options they have, we're happy to help review that as well.
Thank you. Vivian, you have also something to say about that?
Agree with Juan in every sense. I think the biggest thing is be real about what you're going to ask for 2 reasons. One, make sure that what you're asking for is all you need. So for example, if you really need 3 months, don't ask for 2. Ask for 3, because when that 3rd month comes and you can't do what you said you were going to do, you're going to be in a worse position because now nobody trusts you. But on the same token, don't be a hog. Ask for what you need. Don't ask for a year because you think you need to negotiate down. Be real and then show it. If your financials are showing what your financials are showing, you're gonna. That's the one key difference that I'm seeing here again from 2008 downturn. Everyone's really analyzing the numbers. So just be mindful that you need evidence to ask for what you're asking for. And, you should be able to get something. There's exceptions to every rule. There's landlords that are nasty, and then at that point, go find counsel and go down that route. To the benefit of the tenants, the courts are going to be backlogged. So I will tell you that, unfortunately, when, I mostly represent landlords is my area, the courts are going to be backlogged, so it's going to buy you some time. So at that point, if you can pay or you can escrow it in the court, those are things to show good faith that you're trying to work with the landlord.
Thank you. Thank you. In fact, we have a question related to that, Vivian, about the courts. One attendee says, we have seen Zoom trials during these days. Do you think this will be an option when we get back to normal to speed up, the court work?
So Miami-Dade County actually just is one of 3 that just got selected to continue to try out these virtual trials. Look, I think what it does is it takes out the games that lawyers play, and I can say that because I'm a lawyer, where people don't show up on purpose and all of a sudden are sick and play this game where I think a lot of that judges are going to be able to be a little bit more heavy-handed. But it's not going to change the time that it takes to try a case or to present evidence, or the long line of people that are waiting, because whether you're waiting in a waiting room or you're waiting on Zoom, there's only one judge that's going to see X amount of cases. But it's going to take out a little bit of the shenanigans that lawyers play, which buy both sides time, but sometimes make it incredibly costly to litigate. So I do think there's benefits to it.
Okay, great, perfect. We have another question that says, how do you think private lenders for small balance commercial loans will be affected? Maybe Fernando could have an opinion on this.
I think that really, private lenders, how are they going to be affected? I think that they're going to go through a tough time probably. That uncertainty there, we don't know what's going to happen with prices. If they're going to be making loans, typically private lenders are, lending at a lower loan to value, much lower loan to value than banks. And in a situation like this, they're probably going to be even more conservative. They're going to be looking at very specific cases. They're going to be looking at a situation that is really benefits them, and they'll actually be looking for the lower loan to value that they can possibly get out of their deals. That's great. That's what I think.
I would jump in on that as well, as one of the areas where the private lenders really came into the market were 2 areas. One, those complicated deals where it didn't fit into a box on the typical financial institution, or 2, where and they charged higher rates and gave better LTVs, right? Those were generally where the private lenders, particularly in the last 18 months, had been going, because before that maybe they were being more at par. It's going to be interesting. I hope that those private lenders had good legal documents, because nobody cares about the legal documents until you get into these situations. Yep. I think they will definitely go where Fernando's saying. They're going to be a little bit more conservative on how they approach but the problem is their space has not been that. So it's going to be very interesting to see how financial institutions enter the market now that they've kind of analyzed what products they're going to give, who their products are, and where the private lenders are now going to be potentially in the same market. It's to be determined. You're still going to have those that are willing to take the risk and do those LTVs, but the LTVs will definitely come down.
Okay, thank you. So one of our last questions is, what about shopping centers and the new mega mall plans? Anyone have information or an opinion about that?
So the big mega mall plan, my understanding from my partners that are involved, is still on the way. I think it's too early to tell. I think there's going to be a lot of repositioning with some of these shopping centers. We were seeing that already. So this isn't new, but I think really this put the coffin into some of them. Industrial warehouse space, i.e. Amazons of the world, continue to come in, so there's a place for them. Schools have started to use some of these shopping centers, particularly the charter schools, very similar to the Northeast. So repositioning assets of retail space is probably we're going to see. When, just depends on the asset.
Okay, great. Thank you. So we have, we have been an hour talking about this, so I'm going to just tell the last question of the day for one of you, so that way we could close this amazing webinar. And it's just, what advice do you have from your particular perspective in your industry, looking at the real estate market in South Florida? What's the advice that you could provide? Let's start with Fernando, for example.
Yeah, my advice from a banker's perspective is, like we have said, a lot of banks have really put a halt to lending a few months ago, to really assess the situation, to see the scale, to see which sectors they can start lending into. And I think a lot of banks now are getting back into lending, and of course they're being more cautious. They're going to require customers to have to put more equity towards projects. They're going to be looking at lower loan to values, higher coverage ratios. So, as an investor, just be prepared that from that side, banks are going to have those more cautious requirements. And we at Abanca, we are looking to lend. We're looking to grow our bank here in South Florida. And if you need us for a real estate project, just don't hesitate to call us. We'll be more than happy to help you.
Thank you. Juan, what would be your advice?
So from a commercial real estate brokerage standpoint, as somebody that represents both tenants and landlords, I would say my biggest piece of advice would be get good advice, good, insightful, educated advice. I think as you saw with the questions that you just asked, anybody, whether you're a banker or an attorney, if you're tied to commercial real estate in some way, you're very specialized. We don't know about everything. So if you're looking for a condo, get a residential realtor who specializes. If you're looking at it for an office, get an office. If you're looking for an attorney, get an attorney that focuses on what you want. I think this is a lot, there are a lot of stories out there, and I think there are a lot of, brokers, attorneys, bankers that may not be, we may not be accurately managing our clients' expectations because we don't specialize in a specific field. So make sure you get the advice that you need from the person that you need. And then the second one is, if you're a tenant and you have a lease that expires in the next 12, 18 months, don't wait because you think the market's all of a sudden going to change. Don't leave yourself with so little time to negotiate that a landlord knows you can't move and you have no leverage. This is the time for you to review your leases. We're happy to help you. I think my colleague Javier is on as well. Call us. You'll have our contact information. You have an attorney, you have a banker, get expert advice. Don't think that if you use somebody's expert advice, your deal is worse or you get a worse deal because it's more expensive. It's the contrary. You get a better deal, believe it or not.
Thank you. Vivian, what would be your advice?
So this is the first thing I told my particular team as lawyers is communication and responsiveness. And during the downturn in 2008, we're back at it again. Everybody has to be communicating with whoever that other person is, if it's your lender, your landlord, and being responsive to your whatever your industry is, right? You just more than ever. Unfortunately, we're all working in very unusual spaces, as we talked about earlier this morning. And you're working 24/7, and that's not going to change for the foreseeable future. Learn from this and read the detail. The biggest thing I have seen is from 2008 to now, banks have forgotten that they didn't go after that guarantor, and then now they're doing non-recourse. Developers are like, that doesn't matter. My partner would never do that to me in my joint venture agreement. I mean, I could give you 1,000 examples, but you know what? Now that contract, that agreement matters. It's the only thing that matters. So if you messed up and you looked at it, your lease isn't what you want, your loan documents aren't what they want, now is the time to look, learn, and make sure that even when the time turns, you don't go back to the bad ways, because it only matters when things like this happen. So get counsel. Yes, Holland Knight is here, but there's 1,000 other great lawyers. Spend the money and make sure you know what you're signing. And if you make that decision after the fact, you made that decision, but I promise you that it only matters in times like this. So just communication, responsiveness, and devil's in the detail.
Thank you. Thank you so much, Vivian. Well, thank you all of you for share this time with us. It's been a pleasure and honor discuss with you a little bit about real estate and how COVID-19 is affecting. Thank you all the attendees. I just remind you that you can check all the webinars and the events that we are hosting at the Spain US Chamber of Commerce website, which is spainus-chamberofcommerce.com. And thank you, Juan. Thank you, Vivian. Thank you, Fernando. It's been a pleasure having you today. Please be safe, and hopefully we will see each other again in person very soon. Thank you.
Absolutely.
Thank you, Juan Carlos.
Thanks, everyone.
Thank you, the Chamber.
Thanks for having us.
Bye.
Thank you.
Have a great
Bye.
day. Bye.